I'm back from my 11-day vacation to Koh Lipe, Thailand and Langkawi, Malaysia. My vacation was hot, beautiful, and full of sun, but while I was away, I still traded the markets and more than paid for the trip from just a few trades. The beautiful thing about the stock market is that you can really do it from anywhere in the world and even while you are on vacation. And now that I'm back to my home base in Hua Hin, Thailand, I wanted to go over 6 profitable stocks that are all up 15 to 41% this year, even though the markets are volatile and bouncing around like a yo-yo. And be sure to stick around for my top pick at the very end, which has an endless supply of customers. All right, let's go over the 6 different stocks we're going to cover today. Our first one is Tri Pointe Homes, ticker TPH, and they design, construct, and sell single-family attached and detached homes in the U.S. Next up, we've got Coty, which is ticker COTY, and they are a worldwide beauty products company. And then we've got Stryker Corporation, ticker SYK, and this is a medical technology company. Next up, we've got Novo Nordisk. They specialize in diabetes and obesity care as well as biopharm, and their ticker is NVO. Number 5 is going to be Fortinet, ticker FTNT, and they provide cybersecurity and networking solutions worldwide. And our 6th company is going to be Super Microcomputer, ticker SMCI, and they manufacture high-performance server and storage solutions based on modular and open architecture. And now we're going to do our side-by-side fundamental comparison in the beast mode, and you can go to beastmodeanalysis.com if you want to run your own. Okay, we've got all 6 of our stocks across the top here, and let's look at the stock performance starting with the PE ratio. We can see our lowest on the day is going to be TPH coming in at 4.4, and our highest on the day is going to be Coty at 71.2. The income statement tells us whether or not the companies are making money, and this is critical, especially in today's market, because if companies are not profitable, they're going to struggle, and that's going to bring their stock prices down. So our first criteria is we want the companies to be profitable, and for that, we're going to look at the net income margin. Our winner on the day here is going to be Novo Nordisk, coming in very strong at 31.37%. Coming in at number 2 is going to be Fortinet at 19.4%. Number 3, TPH, 13.24%. Number 4, SYK at 12.78%. Number 5, SMCI at 5.48%. And bringing up the rear will be Coty Incorporated at 4.89%. Next up, let's scroll on down to our balance sheet, and this tells us whether or not the companies are financially stable, and we love to look at the total asset versus total liability ratio, or what I call the tattle ratio. And here we just want to make sure that the companies have more assets than liabilities. So if we start off with Tri Pointe Homes, we can see their total assets are $4.7 billion, their total liabilities are $1.9 billion, giving them a tattle ratio of 2.51. So these guys are asset rich. That's a really good thing. Next up, we've got Coty at 1.42. Then we've got Stryker Corporation 1.82, Novo 1.53, and here's our first red flag. Fortinet at 0.96. So here we can see their total assets are $6.2 billion, their total liabilities are $6.5 billion. So if this company was liquidated right now, they are negative, and that's because they have more liabilities than assets. So that would be a major red flag for me. Next up, we've got Super Microcomputer coming in at 1.8. Our next section is going to be the key performance metrics, and these are all very insightful to a company's overall condition. And on my beast mode, I color code things where light blue is the most important, and you'll notice everything here is light blue. That's because these are really important metrics. So if we start off with the revenue growth last year, obviously you want them to be growing their revenues. Our winner on the day here is going to be Super Microcomputers at 46.06, and important, all of these companies were able to grow their revenue last year. Fortinet, they grew at 32.17%. Pretty impressive, and the rest of them kind of in the middle range. Then for the free cash flow margin, this is a critical metric, and if you need to know what anything means on the beast mode, just hover over the little eye, a pop-up comes up, and here we can see free cash flow measures a company's ability to expand its business and pay returns to shareholders using only the money generated through current operations. Basically, free cash flow says they've got enough money coming in to pay their bills and grow their business. Our winner on the day is NVO at 37.71%. I mean, these guys have a lot of free cash flow. That's very important. It gives them them a lot of options for searching out new ventures, for paying debt down, you name it, they've got the cash on hand, and that's why it's so important. Next up, we've got Fortinet. They're very cash heavy as well at 32.81%. And then we've got a little bit of a red flag here for Supermicro Computers. They're actually burning through cash on a month-to-month basis, so that is definitely not a good thing. Next up, we've got the Rule of 40 indicator. Our strongest on the day here is going to be Fortinet, FTNT. And then we've got my own FNR indicator. This is just a down and dirty indicator, and all it does is sum up the free cash flow, the net income margin, and the revenue growth over the last 12 months. The higher that number, the better. And it's just a quick glance indicator, and we can see our strongest on the day is going to be Novo Nordisk coming in at 86.84. And then our last one is our book value ratio. And here, anytime we've got something red, that's a bit of a red flag. Fortinet, we just talked about them with more liabilities than assets, so they're underwater, and that's why it's red here. But the plus here is TriPoint Homes. We can see that they're actually selling below their book value, so that's a real plus for value investors. Although the home industry right now is in the middle of a shakeup, and we're not too sure what's going to happen with that. So I'm a little concerned about where residential home sales go in the future, but at least their book value ratio is very strong for TPH. Next up, let's go ahead and take a look at the growth metrics, and I want to look at the net income growth. And over the last 12 months, we can see our winner on the day here is Conti, growing at a whopping 228.9%. Coming in at number 2 will be Supermicro Computers, very impressive at 154.9%. Number 3 is going to be Fortinet, 41.3%. Number 4, TriPoint Homes, 22.8%. Stryker Corporation, 18.3%. And bringing up the rear here is going to be Novo Nordisk at 8.9%. And the last thing we want to look at is going to be the revenue growth forecast for the next year. Let's start with TriPoint Homes. It's negative 25.5%, so it's going backwards. And that's what I was talking about on residential homes for the unknown future. Major red flag right there. The next one is going to be Conti's revenue growth forecast. They're at 1.3%. Stryker's revenue growth forecast is 7.5%. Novo Nordisk, 16.6%. Fortinet, 22.3%. And Supermicro Computers' revenue growth forecast is 30.1%. And I think it's really important to look at these revenue growth forecasts, because if companies are not growing their revenues, then why should their stock prices be going up, especially in our current market? And now let's just take a quick look at the charts here. We've got TriPoint, and this is an absolutely gorgeous chart, beautiful upward trend. This is what we call the railroad tracks, where we've got the 20 and the 50-day moving average. Kind of looks like a road going up. Exactly what we're looking for on the trend. However, they've got a revenue growth forecast that's negative 25.5%. So even though I love this chart, that would keep me away from investing in this stock right now in the current market. Next up, we've got COTY, another really nice looking chart here. Beautiful set of railroad tracks in an upward trend. And we just picked up a buy signal. And if you want to try my indicators for free, I got a link for that down below. And then we've got the revenue growth forecast is 1.3%, and their net income margin is pretty skinny at around 4.9%. So I'd be looking for a little bit more growth for me personally, but this company is steadily going up, something to consider, but I would not expect a massive price increase in their stock looking at their current numbers. Stryker has a really nice healthy looking chart, the 20 over the 50 over the 200-day moving average, heading right on up. The next big point would be if it could close above 284 on high volume, that would be a potential breakout. And if you like this stock, consider purchasing it near that 20-day moving average line. So anytime it comes down and bounces off that, that would be a good opportunity to consider a purchase on it. For Novo Nordisk, their chart is looking really good. We've got the railroad tracks going up, a little too much, too fast right here. I'd love to pick it up right around this 146 mark if it bounces back down to it. But we can see we've got a real good mix. They pay a nice little dividend, 3.1% yield, net income margin very high, over 31%, and steady revenue growth forecast at 16.6%. All told, I'm liking this stock. For Fortinet, they are trending the right direction. We can see their moving averages are now stacked, what we like. But remember, they've got more liabilities than assets, so that would keep me out of this company currently. And our last one today is going to be Supermicro Computer. Here we can see they just got those railroad tracks going up. They had a real big down day yesterday, came all the way down to that 20-day moving average, and they're bouncing off of it. They've got a good revenue growth forecast. And then if we look at our indicators here, we can see our momentum is coming down. That's where these dark blue lines come in. So if you're used to my indicators, ideally you'd want to wait until you get a buy on buy, where we go green on green and hopefully pick up a buy signal. So if you're looking to pick this one up, I'd wait a little bit and wait for these indicators and a possible buy signal. My top pick today is Novo Nordisk. Novo specializes in diabetes and obesity care, and according to recent data, more than 1 billion people worldwide are obese, and obesity is now considered a global epidemic, with worldwide obesity having nearly doubled since 1980. In a nutshell, Novo Nordisk's customer base is growing. They have a revenue growth forecast of 16.6%, and their net income margin is a whopping 31%. And here are a few more facts for you. Number one, Novo produces 50% of the world's insulin supply. Number two, Novo produces over 600 million insulin pens. Number three, over 34 million people use their diabetes products. And number four, Novo conducts clinical trials in over 50 countries. Now, if you believe obesity and diabetes are going to continue to grow worldwide, then Novo Nordisk is a company you should definitely consider for your portfolio. I really hope that you enjoyed today's video. As always, have a phenomenal rest of your day. Smash that like button for me. Subscribe to the channel if you haven't already. Grab some free stocks from Moomoo and Webull, and don't forget to try my indicators for absolutely free. The links are down below, and my trade alerts are in my Discord. Thank you so much for watching, and I'd love to see you back here on Monday, Wednesday, and Friday. I'll see you soon.